So I want to continue on with my look back on some of the pearls of wisdom from Richard Donchian. Now, there are so many things that were valid decades ago that are still applicable to the trading of today. And my first look back can be found here at this link. Now, these two Donchian wisdoms center around volume. However, markets such as Forex, being a decentralized market, they don't have an accurate measure of volume. Here's a tip. Many traders who like to incorporate volume will use the currency futures markets in their analysis, but they'll execute in the spot market. Now, that being said, there are quite a few traders who don't use volume for any reason, citing that they could not find any statistical edge using volume. Instead, the term "that's different" is used, which simply indicates that something unusual has happened compared to the recent price action. When something different happens, trading opportunities are looked for. I'm going to use charts without volume so you can see how you can use the "that's different" term in relation to two more Donchian guidelines. The Donchian talks about looking for a volume climax, especially when the markets have made extended runs. Now, they can be tricky because there are times that what looks like a climax is really renewed interest in the instrument that you're watching. Ensuring that prices advance for a length of time can be a variable in your trading plan that you need to see before thinking that there's a change of state in the market. Another tip, just because the market blows off, it does not necessarily mean that a reversal is taking place. Markets rarely immediately reverse, but they tend to balance out before changing direction. Now, this chart shows a market that's been in a steady run for quite a while. Now, it's not in this graphic. However, the market has been making the stair-stepping trend pattern of higher highs and higher lows. Suddenly, price rockets to the upside and eventually rolls over. Now, also highlighted on this chart with the red circles is a pattern that's called three pushes. Now, this one's a little sloppy, but combined with the "that's different" pattern and occurring after the market breaks out of a range, again, just off this chart, I think it's worthwhile to show. Now, at times it can be difficult to differentiate between a climax move and just a strong thrust that sets up a good pullback trade. The key is to look for some type of price action that shows that the lengthy move is coming to an end, as in the candle that I've highlighted with a green arrow in this chart. I find the blow-off type of action very useful when using a multiple time frame approach. For example, this chart shows your standard trend lines, and the break through the bottom plus a "that's different" look at the three preceding red candles can alert you to be cautious on the lower time frame. Now, looking at the smaller chart that's laid on top, if you were short after the flag, you'd be able to see that the strong move down is actually not just strong selling interest, but possibly the end of the move. That would have you either tightening up to stop or just getting out when the market begins to turn. When price moves from advancing to a period of dull price action, you can get a great position and be in for the meat of the move. So what do you look for in the period of dullness? Now, this is another guideline that can be a little tricky when not actually watching the volume indicator. It relies on watching a few patterns emerge on the chart that may indicate that there is a buildup of either buying or selling pressure. There are three things that I personally look for, and they are: 1 is a failure test of the low or high of the range, a buildup of a range of price, and 3, a continuation of the move with a higher time frame context. So let's break down this chart, and for context, we're coming into this off of an uptrend on this time frame. Now, I used the weekly chart for clarity, but the daily chart shows the range in better detail. We are also overextended on a higher time frame, so while not a perfect trading example, it's the concept that's important. The number 1 black line indicates the bottom of the red candle, which at the time represented the bottom of a small range. You can see the test of the low, and price was soundly rejected and would have made a tempting trade location. Price didn't follow through, and oftentimes these represent an expansion of the range as seen with number 2. We get a smaller range indicated at number 3 that is inside of the bigger expanded range. The location is key, as we see that range forming in the upper half of the larger range. Finding a trade location inside of the smaller range, given the location and same time frame context, it's not a bad play. You get a favorable position in this example prior to the breakout of price. However, as mentioned previously, the larger time frame does appear overextended, and at this point, a reversal candle has formed on the higher time frame. Now the key for the overextension and possible climax is looking for price to print a "that's different" look to it. When this occurs after a steady state run in either direction, you can either look for a position in the opposite direction or, using the higher time frame, filter out a trade that may be at a dangerous point in time. The second type that I just explained, for me, is used to get into the current trend unless higher time frame context spells out something different. I look for an obvious pause in price and a sign that price is rejecting, in this case, lower prices. Failing that, a smaller range forming near the extremes of the range can often make a great location to get into the market. Now, while these may not be exactly what Donchian was talking about, I wanted to show that even without volume, the chart itself can often spell out what you need to know. And I encourage you to break out your charts and see if you can identify commonalities in various instruments to not only verify this information, but perhaps also build upon your own trading plan.